Hello and welcome to Explain the Charts. Today, March 9th, 2025, we're analyzing the USDCHF, looking at recent news and its impact on the charts. Recent headlines indicate a mixed bag for the USDCHF. Weaker than expected jobs data in the US has put downward pressure on the dollar, while Swiss inflation remains low. The Swiss National Bank's commitment to using currency interventions also adds complexity. Let's move to the charts and see how this is all reflected in price action. Looking at the daily chart, we see a lot of volatility over the past several months. The pair has generally been trending downwards since late 2023, but we've recently seen some upward movement. Notice that the price found support around 0.84, which seems to be a key level to watch. It struggled to break above 0.92, which might be considered as a strong resistance. Let's narrow our focus to the most recent price action. We'll zoom in on the candles from the start of 2025 to now. In the last few months, we can see that the USDCHF has been bouncing between 0.877 and 0.915. The most recent drop indicates a bearish sentiment currently, possibly influenced by the recent US jobs data. Now, let's switch to the hourly chart for a closer look. The hourly chart shows a more detailed picture of the recent volatility. We can see the pair attempted a rally, but met resistance around 0.884. The current price is hovering around 0.877. If it breaks this level, we could see further downside towards 0.87. However, if it holds, a bounce back towards 0.884 is possible. Let's examine a shorter time frame to get an even clearer view of what's happening right now. Switching to the 15-minute chart, we can see very recent consolidation around 0.877, which is a key level. There's a lot of indecision in the market right now. The 15-minute chart is showing that volume seems to be thinning out as well. So, what's the outlook? Short term, the USDCHF looks bearish, with the 0.87 level being a critical area to watch. A break below that could lead to further declines, perhaps down to 0.86. Expect this to be about 60% likely. However, a bounce from 0.87 could signal a potential rally back towards 0.884. The likelihood of this is around 40% due to the prevailing bearish sentiment reinforced by the recent news. This likelihood would increase if we see positive news for the US dollar, such as better than expected economic data or hawkish comments from the Fed. Longer term, the USDCHF's direction will depend on the broader economic outlook and monetary policy decisions from both the US Federal Reserve and the Swiss National Bank. Key levels to watch in the coming days are 0.87 as support and 0.884 as resistance. Keep an eye on upcoming economic releases and any news related to trade policies, as these could significantly impact the pair's movement. Thanks for watching Explain the Charts. Don't forget to like and subscribe for more in-depth analysis.